All right, so let's go over the master reversal pattern. This complements the shark harmonic, and it complements the inverted head and shoulders, and also market structure shifts. If you can pinpoint this when it's going on, you can get in early trades. You won't get in at the head of the actual head and shoulders, not in the smaller time frame, but you will get a wick entry on a higher time frame. So what is the master reversal pattern? The master reversal pattern is basically a shift of market structure. So for example, let's break it down. As this is a trend and it's going down, right? And this is what I discuss a lot in our Sunday sessions, but I just want to make a video for it so you can keep it as a reference. So as it goes down, what tends to happen when price reverse is this, right? This is what tends to happen. The previous low that was created, it gets breached. So once this low gets breached, you want to wait. You want to wait for a retracement down to the bottom. Once this low gets breached, you want to wait for a retracement and a failed break of a low, and for it to go up. Now, here's the thing. There's two setups that can happen. There's something like this, which is before the high is broken, right? And the low is created. There's something like this. And then the other thing, you know what I'm going to do? I'm going to take this. Let's make it a shorter one. The other thing is this. We can have the same exact scenario. Oh, wow. That's not supposed to happen. Same exact scenario. But instead, we'll be looking at this. We want it to break the high. Once it breaks the high, that's 100% confirmation it's going to reverse and hit at least the next high. Keep that in mind. Once the high is broken, all you have to do now is wait for that retracement and that low to be created, not breaking the previous low, and run it up. Now, how do you catch these? Once price starts going up, all you're going to do is wait for it to see when it starts retracing. That's all you're going to do. So as it go up, you just wait to see when it starts retracing. Once it starts retracing, you simply pull out your fib retrace tool. You find an order block around here, and you pinpoint the zone that is most likely to hit. Right? So now, it's usually going to be a 61.8, 50, or if it's going to create a crazy harmonic, it'll go all the way down to the 88.6. But you have to anticipate it before it happens. So as it's going down, you should already have your fib drawn, and then wait for it to come into these zones. You can either set a limit order here, or you can wait for the actual reversal pattern on a lower time frame to show up here, so you can get in early enough to run it up. Now what'll happen is, once you get in here, if you haven't gotten here, once you get in here, you're in an early move. You're in a wick entry of a higher time frame. So it's the same with this. You're in the wick entry of a higher time frame. So this is the master reversal pattern. Master reversal pattern. Price will break the previous structure zone. And this can be, we can reverse this, right? We can reverse this. That was for something else. Let me do this. We can reverse it. Because it's the same concept. Hold on. Oh, my uptrend look ugly. But it's the same concept. Once it breaks into the zone and it creates another high, that high is your entry point for you to take it down. So once it breaks into the zone that it just left, that's it breaking back into this zone. Instead of respecting it to keep going up, it broke back into the zone. Right? So if we box this actual move here, it broke back into that actual zone and shot up and failed to break the high. So it created a lower high. So you do the same thing. Your Fibonacci, you mark the zone before it even gets up there. Put your entry and then you run it. Put your stop loss. When it creates another high, you move your stop below here and you're set. Now the other scenario is boom, like this, something like that, and then let's say if it broke, once it breaks that low and it creates a high, that's automatic confirmation that it's going to try to run down. So once it breaks that low, you draw your fib, wait for it to get into that zone, and run it down. Easy. This is the master reversal pattern. You want to wait for the structure to shift. You want it to break a high. Most likely a high is broken on a lower time frame from this. You want it to break in order for you to take advantage of it. Take advantage of the retracement for it to go back up. So, how does that look on a chart? This was for another video. But how does that look on a chart? Well, I'm glad you asked. All this was for another video that I did earlier. Let's erase all that. Alright, so I'm glad you asked. Right? If you look at this, this high just peaked up a little bit and came back into the zone. Right? So it came back into the zone. It left the zone, peaked up, came back into the zone, retraced. First point of entry is right here. This high did not break that high. So guess what? You draw the fib, 61.8, order block sitting right there. I wish I can show you. Let's go to the lower time frame. Let's see if it shows it. Yep, order block sitting right there. Like I said, you just look for an order block once it retraces. Boom, order block sitting right there. This is your first chance to get in, right? So if you miss that, once it breaks the major high or low, see it broke it, what you will do, you'll run the entire move. This is the entire move right here. You run the entire move. So when you run the entire move, based on a higher time frame, this is the entire move. Or you could do it from where it actually retraced from. And look, order block sitting right there. I think this would be better though. They're both pretty much the same. Order block sitting right there, 618 rejection, and boom, you can take it down. It happens every single time. This does not fail. This does not fail. Even something as ugly as this, right? So notice how this is not even as clear, but notice how it's going down, right? So it's going down, but then this is a retracement back into the zone, into the previous low. It retraced back into it and failed to break the previous low. So what is that telling you? It's more than likely to reverse. So if you do a fib here, most likely there's an order block sitting somewhere in this zone. Let's take a look. So it came all the way back down to the main order block, right? And it retraced back into this order block. Let me see if we can go even further down. So this order block right here was the main anchor point, right there. That's why you had to use every time frame. So this is the main anchor point for it to run up. Now this order block was the second one. Remember I told you, once it starts retracing, all you have to do is go down to a lower time frame to pinpoint where it's going to anchor from to shoot off of. So notice if you miss this, all you have to do is wait for it to come back to retrace into this. So notice once it hit this, it went up and then it came back to come into this order block. And then it came back to come into this order block. So it pretty much gave you 1, 2, 3, 4 opportunities to get in this trade. Right? So now notice, I'm not done. Notice, you see how I told you it broke that zone. So as it broke it, it traded back into it. There should be no reason why any trend should trade back into a zone if the trend is supposed to continue. So that's the major sign that trend is reversing. It's trading back into the zone it just left. So now once it does that and then it fails to break the previous zone, that's the other sign that the trend is reversing. Now this high is significant because this high is a new high that was created. And if you miss these entry points and the high is broken, you have to wait for it to retrace back down. Now once it broke the high, it took off. So this would have been the only opportunity to get in. But it's the same concept over and over and over. This is what's called the master reversal pattern. This is the big fish master reversal pattern. Based on what I understand, right? So now you can couple all of this with harmonics. You can couple it with whatever, because this, if you measure this, you have a sharp harmonic, right? You have a sharp harmonic. So you can measure it with other confluences. And yeah. So this is all I wanted to show y'all. This is the master reversal pattern. Keep watching this video over and over and over and back test the hell out of the charts so you can understand what's going on, right? This was JPY, same thing. See how it breached down here, came up, broke this high, and then it gave you opportunity to get in. But then this formed a triangle, so you have to take a look at every confluence possible. So yeah, that's all, man. That is all. This is the master reversal pattern. I'm gonna keep on dropping videos until y'all understand what y'all seeing. So big fish, let's get it.